Welcome to the Three Edge Week in Review for the week of March 28th. I'm Fritz Folts, the Chief Investment Strategist here at Three Edge, and joining me here today is a special guest, Lawrence Jules, who is our head trader here at Three Edge Asset Management. Lawrence joined us recently from Charles Schwab, where he served as the head trader for all Charles Schwab Investment Management's separately managed account strategies. However, Lawrence isn't actually new to our team since he was one of the early team members at our prior firm, Windward Investment Management. Lawrence has over 25 years of investment management, research, and trading experience. And today, with Lawrence's help, we're going to focus on trading and what goes into the actual buying and selling of ETFs. As most of our listeners know, ETFs are the primary investment vehicle that we use here at Three Edge to construct portfolios. And so with Lawrence in the house, we'll be looking at how ETFs are actually traded and how trading ETFs is different from trading individual stocks, and why trading expertise can be an important component of investment success. Lawrence will also provide a list of best practices for individual investors who may trade ETFs for their own accounts from time to time. First, a very brief look at the activity in the global markets, where this past Thursday marked the end of the first quarter. And the first 3 months of the year were impacted, obviously, by Russia's invasion of Ukraine and the Fed's raising of short-term interest rates to combat inflation, which remains at levels not seen in over 4 decades. And it was a difficult quarter for both stocks and bonds, as both U.S. equities and U.S. treasuries posted negative returns, while real assets such as gold and commodities posted positive returns in the first quarter. Looking ahead to the second quarter and beyond, on Friday, the jobs report showed that the unemployment rate has now fallen to 3.6%, which is approaching its pre-COVID levels. However, markets will continue to face the impact of both the ongoing war in Ukraine as well as the Fed's tightening of monetary policy. And these risks to the real economy from these twin threats warrant a healthy dose of caution when making investment decisions. So now let me bring Lawrence into the conversation. But before I turn things over to you, Lawrence, I just want to show a chart which indicates just how extraordinary the growth of the ETF market has been over the past almost 20 years. All right, so let's get started. So Lawrence, I think it's safe to say that most investors are not necessarily aware of all that goes into the actual trading of ETFs, and in particular, how trading ETFs is decidedly different from trading individual stocks. So perhaps to get us started, you could just give us a basic overview of what goes into trading ETFs.
Thank you, Fritz. Thank you for having me. So, when I think about trading ETFs, and what I think everyone should think about is a good place to start is to think about, first of all, most people think of stocks and they think of ETFs and they think they're the same. First of all, an ETF is not a stock, even though it trades like a stock. An ETF is just a wrapper. And inside that wrapper, sometimes it's made up of a number of individual components. Inside of an ETF, you can have from single stocks to commodities. So it's important that people understand that it's just a wrapper. A couple of things make ETF very unique in terms of how they trade. First of all, unlike a stock, an ETF have two sources of liquidity. ETF can trade in the secondary market just like a stock, but an ETF also trade at the basket level. So that's another source of liquidity. So that makes it fairly unique. And at the basket level, that's referred to as the primary market. Third thing to keep in mind that's also unique is that unlike a stock, the price you see on screen for an ETF is not necessarily the fair value of an ETF. ETFs actually have a fair value, the net asset value, similar to a mutual fund. So obviously, an ETF has the feature of both a stock and a mutual fund. So it's important that investors understand that as they go into it. The factor that's most important is specifically understanding the fact that an ETF has a fair value, which is called the net asset value. And most importantly, the main thing to keep in mind is the most important actor in the ETF space is the authorized participant, which whose job in the process is to make sure that whenever the ETF itself deviates from the value
Hmm.
of the basket, their job is to step in and bring it back in line through a process called arbitrage mechanism.
Hmm.
So,
Excellent. Very good. Yeah. Nice. Thank you. So now perhaps I think it would also be helpful to just explain in a bit more detail how we here at Three Edge go about trading ETFs on behalf of our clients and how the actual trading of the ETF vehicles that we use to construct portfolios can be additive to the entire investment process.
sure. So, our investment process begins with at the investment committee level. So, as most of our investors know, we invest based on, um, our models are tracking indices. Well, for each indices, there's a number of ETF that can be selected. So, this is a process we take very seriously. Which ETF do we use to manifest the return that we think we can get from a particular indices? And that process began obviously for us with the security selection. And that process is both quantitative and qualitative. And there's a couple of things that we try to determine. One, while our research side may look at an ETF from a index methodology and looking at things like tracking error, we also look at index methodology as well from a trading side. But what we focus on most importantly is how is the methodology of that ETF is going to impact its overall pricing, both
Mhm.
as a block and trading it day to day in the secondary market. So our analysis tends to center around that. And it is centered around understanding the methodology, but more importantly, identifying and understanding all the different factors that may impact how this particular ETF may trade in the market. So we look at things like what is the optimal method of execution? Is it most would it make the most sense to trade it in the secondary market? Does it make the most sense to trade in the primary market? That decision is made quantitatively. Another factor that we spend a lot of time understanding is kind of all the different nuances that we think could impact pricing. And one of which is timing. What's the optimal time of the day to execute this particular trade? If you're trading commodities, for example, there's a very good chance that a number of the underlying contracts have different times of the day in which they're closed. So it's important for us to first determine and understand what is the optimal liquidity pool time of the day to execute. This becomes pretty important because this could impact your return. Because at the time the trade take place, if you're trading at the time where it's the deepest liquidity, odds are you're going to execute at the cheapest costs versus if you trade outside of that window where your cost may be substantially higher. So this is something that we spend a lot of time trying to understand. And in closing, one of the more important things also we focus on is fair value. What is the fair value of the ETF at the basket level versus the ETF? Are there any deviation? And is there a real premium discount to the ETF? And then lastly, we spend a lot of time working with our partners. We have a relationship pretty much with everyone on the street when it comes to market makers, brokers. We have a strong relationship with the issuers. So we tend to work pretty closely with them as well to make sure that our understanding of the ETF is exactly what we think it is. And also our understanding of the pricing and all the different nuances are what we think they are. So again, the process began in the investment at the investment committee level, and that's where we make those decisions. And I think those are the things that make what we do a little bit unique: the fair value factor and understanding the different optimal windows and different factors in our relationships. We think those make a big difference to our process.
Absolutely, and that's a whole heck of a lot that people, frankly, just don't see that we're doing each and every day for our clients. So I have another question, a last question for you. It's probably the question that people will be most interested in. I don't know, but what if you could provide for us, let's say, your top, best practices when it comes to trading ETFs for individual investors, right? So someone who's trading their own account, what are the things that they should pay attention to when they trade ETFs for their own account from time to time?
Sure. I would say, like us, I think the first thing you want to do is understand what you're buying. If you wanted to buy a high yield ETF, there are literally 10 different high yield ETF you could buy. The question is making sure that the index methodology of the ETF that you're purchasing is in line with your expectation of what returns you think you're going to get and how you think that ETF is going to behave once you purchase it. So you need to understand what you're buying. You need to understand the index methodology. And one of the ways to do that is by visiting the issuer's website, do some
Mhm.
research, do your due diligence. And I think you'll quickly understand, does this align with what I expect is going to happen? Also, there's some general do's and don'ts when you think about trading ETF. There's a lot of dislocation that tends to take place in markets, particularly, you know, depending on the asset class. So one general rule is try to avoid trading the first 30 minutes of the day and the
Mm.
last 30 minutes of the trading day as well. One reason for that is you tend to have more dislocation when market first open. And the reason for that is simple. If the underlying securities that makes up the ETF, if all the components are not open, the
Mhm.
ETF itself is not priced efficiently at that point.
Right.
What tends to happen is market makers tend to widen the spread of the ETF to reflect for that.
Right.
So the idea is that you want to give the ETF time for all the components to open so you can actually have a price on screen that's reflecting the value of the ETF at the basket level. So it's
Excellent.
important to, I think, ideally, stay away from the first 30 minutes and stay away from the last 30 minutes where your trade can take place in market dislocation.
Mhm.
Also, try to avoid using market orders. Use limit orders if you can. Again, to avoid your trade participating in any type of, you know, market dislocation or maybe a mini flash crash. Plus, it's just good trading. You know,
Mhm.
go out with a price that you feel comfortable with and put a limit and see what happens. The other thing is, I would say more importantly, I would say like us is don't focus so much just on expense ratio. Expense ratio is the beginning of the story, but it's not the end of the story.
Mhm.
So when you look at the expense ratio, also look at the spread. The spread is the difference between the bid price and the offer price. Because if you buy an ETF that has an expense ratio of 20 basis point, and that ETF has a 20 basis point spread between the bid and the ask, and you hold it for a year, your total cost is 40 basis point,
Right.
not.
Right. Yeah.
So it's important to understand, where does the spread that you're paying come in when you attach it back to the expense ratio. So for me, I think those are the main things I think as an individual investor that I think you should always try to keep in mind. And I think if you can do those things, I'd say, trade safely,
There you
but
go.
know what you're buying.
Excellent. That's really, really helpful. And so, great, Lawrence. Thank you for joining us today. That was an excellent look into the world of trading ETFs and how actually trading expertise can contribute to an investor's bottom line. So that will do it for Lawrence and me. Remember, all our videos are available on our 3Edge YouTube channel. And in addition, all our videos and written commentaries are always available on our website at 3edgeam.com. And so until next time, on behalf of everyone here at 3Edge, thanks for listening.